Welcome to Inside India. I'm Amitoj Singh, and these are your headlines. We're seeing a relief rally after President Trump backed off his threats of using tariff and force on Greenland and hinting they're working towards a deal in an interview on CNBC.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole.
Indian markets may also get more tailwinds on positive trade news. President Trump sounding optimistic about a deal, while momentum builds for a landmark trade deal with the EU. Ahead of the potential EU deal, Tech Mahindra landing a $500 million contract with Spain's Telefonica 02, its biggest ever in Europe. And the IMF's former chief economist Geeta Gopinath, speaking at the World Economic Forum, says the bigger threat to India's economy is not tariffs, it's pollution. And it is a sea of green in the Asian markets. APAC markets rebounding following gains on Wall Street after Trump's walk back on tariffs against the U.S. over Greenland. Tech-heavy South Korea's Kospi really the one that's shining out here, almost 2% up. We've been seeing that it's hit a record high, going past 5,000, rising 2% nearly, despite the country's economy shrinking 0.3% on a quarterly basis in the October to December period. Now, Japan's Nikkei 225 was also up. It's about up now 1.87% after a couple of losing sessions. Japan, remember, saw its December trade figures released today with a 5.1% export growth, missing Reuters polled analyst estimates. We're also watching out for the BOJ's rate decision on Friday. Now, the Indian markets, they come online in about 45 minutes. GIFT Nifty futures indicating a slightly positive start. That's what it is indicating. It's indicating that we'll get to about 25,320 or so. Nifty 50, remember, had a bad day again. The Indian equity market closing in the red for the third straight session on Wednesday, extending a sharp sell-off that has wiped out nearly 1,400 billion INR of investor wealth. The fast-moving consumer goods sector faced the heaviest impact from foreign investor sell-offs in the first half of 2026. But could that change today after what Trump has said? Signs are that something might change since precious metal prices declined on Thursday because of those so-called easing geopolitical tensions, perhaps reducing that safe haven demand. To talk about Trump, though, our top story of the day, U.S. President Trump says a framework deal has been reached over Greenland, backing away from earlier threats to impose tariffs or use force to gain control of the territory. Speaking at the World Economic Forum in Davos, Trump said he does not intend to use military force and has tasked his top national security team to handle negotiations with Denmark. CNBC's Joe Kernan spoke to Trump right after that speech. Here's a slice of that conversation.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland, and it has to do with the security, great security, strong security, and other things.
The market, 600 points, getting back a lot of some of the nervousness we had in the last couple of days. The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
A deal of ownership, a deal...
Well, it's a little bit complex, but we'll explain it down the line. But the Secretary General of NATO and I and some other people were talking, and it's the kind of a deal that I wanted to be able to make.
Where does Denmark, did they weigh in on what they want, what they would agree to?
Well, I assume they did because he very much represents, he's a strong leader. Mark, you know Mark, Rutte. And he, I assume he's been speaking to them. He's been speaking to all of them.
Are mineral rights involved? Is ownership involved? Did the Golden Dome sway people?
I don't want to say yet, but...
The Golden Dome was very compelling today when you talked about that.
Yeah, the Golden Dome, and they're going to be involved in the Golden Dome. And they're going to be involved in mineral rights, and so are we.
It's not specific enough to know at this point how long this lasts, whether it's...
Forever.
Forever.
It'll be forever.
For Greenland at this point.
Yeah. Forever.
That's staggering.
That's better than a 99-year.
This is what, 2 hours after.
It's better than the Obama deal with the famous Iran nuclear deal with a 9-year with a 9-year deal. No, this is forever. This is a long-term.
I mentioned that you could have come over here and just talked about what you wanted to, before you left. I think you wanted to talk about where the progress that you've made in terms domestically with the economy and everything else in the United States. And you didn't have to talk, I didn't think you had to talk about Greenland, but you're always moving on to the next thing.
In the speech I gave, I talked a lot about Greenland because we need it for security, and now we're going to have even better security, I think, than I would have had before.
And I know how you operate. I know that you didn't take force off of the table, but all along, I think if there was going to be a war, it was going to be a trade war. Is that fair to say?
I think so, yeah. I don't see us fighting with Denmark,
NATO.
Fighting with
you've done so much to try to strengthen NATO. I'm sure you don't want to see the dissolution of something you work.
I'm proud of NATO from the standpoint. Look, I brought them up from 2% to 5% of GDP. They're paying a lot of money. They pay us a lot of money because they buy missiles and they buy a lot of things. Unfortunately, Obama gave them $350 billion for Ukraine, which was just terrible. I mean, the whole thing was terrible. It should have never happened. That's a war that should have never happened. But they paid a lot of money, and I don't know if you know, but I signed a rare earth deal with Ukraine to probably get most of that back, maybe more back than we haven't. But what they did, they were just giving out money like cookies to a child.
In the meantime, Indian publication Money Control caught President Trump and asked him for an update on the India-US deal. Trump reiterated he has a great relationship with Prime Minister Modi and that the US will have a good deal with India. Also, after EU Commission President Ursula von der Leyen teasing what she called the mother of all deals with India, the bloc is now moving on security as well. EU Foreign Policy Chief Kaja Kallas says the European Union and India have agreed to proceed with a new security and defense partnership. An EU delegation is expected to travel to India just next week, where a broader free trade agreement could also be announced. In the meantime, Spanish Foreign Minister is currently in New Delhi saying that India and the EU are on a cusp of a trade deal.
In these very complicated times in the world, it's very important for Spain to foster our relationship with such a reliable country like India, a country that believes in international law, that upholds the principles of the United Nations Charter, and that believes in multilateralism. A very good sign would be the final agreement on the FTA with the European Union that we very much would love to see being put forward finally. It's the right time for that.
And in the build-up to that FTA, we're already seeing business deals flowing in. Indian IT services firm Tech Mahindra signed a $500 million contract with Spanish telecom major Telefonica 02. More details later in the program, and we'll be speaking to Tech Mahindra from Davos later today. We'll be speaking to Mohit Joshi and these other renowned guests. Now, joining us to talk more about everything that's been going on in Switzerland at the World Economic Forum, Richard Rosso is Chair on India and Emerging Asia Economics at Center for Strategic and International Studies, also known as CSIS. Thanks so much for joining us, Richard. Really appreciate it. I want to just start by getting your first view on everything that's happened in the last, 15 hours or so. Has Trump got what he wanted on Greenland? And I ask this because when he said he can't protect Greenland from China and Russia earlier, without taking it over militarily effectively, how has that position suddenly changed? And I ask this because are we really to believe this truce? Should a relief rally continue?
It's not hard to imagine the United States having the ability to implement stronger security on Greenland, where we already have a major force posture. It's also not impossible to imagine that President Trump would get what he wants in terms of mineral rights and the ability to exploit minerals there. But the transfer of ownership from his kind of cryptic comments he had after the meeting today, that still seems like it's going to be a bridge too far. But if we have stronger security, if we're able to implement stronger security measures and get access to some of the minerals, I think the president would be relatively happy with that. So wouldn't be surprised if that's the contours. But again, it was kind of a cryptic response, so we're still grasping at straws to know exactly what happened.
Okay. How does India view this, both diplomatically and when it talks about its trade relationship, its trade negotiations that are seemingly still ongoing? If he was willing to take on his closest allies on Greenland, the question is, will he back down on India? And I ask this also because the Indian market fell to that EU tariff threat. And this deal with NATO, should it give the Indian market any comfort or make it think that, wait, he isn't going to back down? He didn't do that with EU. He won't do it with us.
Yeah, I think it probably has a lot deeper implications for the U.S.-India security partnership than it does for India's commercial relations. India already kind of recognizes the United States is in a period where not really a trustworthy partner. So you see India striking out, signing trade agreements with a number of other partners. Of course, the EU deal we hope is just around the corner, but the Swiss-led EFTA group, the UK, on and on. A really robust set of deals that India signed in recent times. And also, you see the Modi government getting back to the basics on domestic reforms as well, because a lot of India's market growth and stability is going to rely, frankly, on reforms, which is still an uncompleted process. So I think in that sense, you've got kind of the two features, India's closer economic relations with other partners and domestic reforms. But on security, this brings back the ghost of the United States as unreliable. And, the reliability when it comes to security is such a deep underpinning. We've been building up a direct bilateral relationship on security, building up ties underneath the Quad. And I think when you see the United States kind of going our own way, willing to shred longstanding partnerships, then I think that longstanding fear from India that we may not be a reliable partner really comes back to the forefront. So I'm more concerned on the security front.
Okay, so let me ask you this. If you are that concerned about the security front, what is India's primary economic challenge and security challenge, given that the zeitgeist is such that the headlines have dominated the idea that tariffs remain the biggest threat, and tariffs are leaving India vulnerable to China militarily without U.S. support. What's your take?
Well, so far, here we are many months into the dramatic increase of U.S. tariffs against India, a penalizing tariff plus the Russia tariff on top of that. And, overall, it hasn't been that bad. U.S.-India trade is about $147 billion the last 12 months, and that's up about 15% year on year. You saw a bit of a dip the last 3 months as the tariffs begin, but it's basically on par for what it was before because, President Trump did exclude large portions of trade, such as pharmaceuticals, which is a major import item. So the top line number, too, on tariffs isn't quite as bad as the number that's actually implemented and enforced. But then you do have these other threats coming up, including legislation on Capitol Hill that would add additional penal tariffs against countries that do business with Russia, up to 500%. Then you start getting in crazy land where it'd really be impossible for Indian exporters to hit the U.S. market. But overall, the impact on the tariffs so far, because there are a lot of carve-outs, has not been as bad as we were kind of expecting. But, again, for the Modi government to look to strike out agreements with others, to start doing some domestic reforms, here we are just a week and a half away from the budget. I wouldn't be surprised if we have a more robust set of announcements on reforms in the budget than we've seen in the last number of budgets, because, again, growth lies more in India's hands than it does in a foreign capital.
What more reforms do we need in this budget?
Well, you've got the things that you can do kind of within the budget, obviously looking at tax rates and things like that. But really, a lot of the reforms that have to happen are things that are outside the budget. So we'll be watching very closely the finance minister's budget speech. I think on the budget, probably the single biggest thing the finance minister has announced a couple of times, but never really implemented, was this whole idea of duty inversion, where for India, a lot of times it's cheaper to bring in a finished good than it is to bring the input goods. Well, if you drop the customs duties on input goods, that helps your domestic manufacturing. So tools like that are within the budget, and hopefully they'll go deeper and hit some things. But when you talk about domestic reforms, some of the work they've done earlier on ranking states' business environment, some of the work that they're talking about doing on improving legal processes so you can get remediation a little faster. There still is some work to be done on GST. You've got large parts of India's economy, such as hydrocarbons, alcohol sales, real estate, that are still exempted from coverage on GST. So no want for an agenda. There's a lot of things. We all probably have our own sort of wish list, but that's probably the big buckets I'd look for, both in the budget and then some of the things we might see in the budget speech that they'll have to do later on in the year.
Okay, there's a lot that you've mentioned out here. I will get into that slowly and steadily. But first, I just want to ask you to be our poly market for a minute. Think about it like that. What percentage would you give to the following? A removal of the 25% penalty on India for buying Russian oil in the coming 3 months, number one. No change till the midterm elections in the US, and no change in trade or tariff till the end of Trump 2.0, which is Jan 2029?
Well, you're speaking to a horrible optimist. So every time they say the deal's around the corner, I want to believe it. So I'm going to go ahead and offer the first option there. I do think the Russia tariffs will be taken off. We'll get the trade agreement done, and India will have a more reliable tariff level in line with other countries. But I've made that prediction before and been wrong. So I'll go with A, but realizing I don't have a great track record on that one.
All right. About the EU deal that's been called, the mother of all deals, probably by the end of this month it'll be signed. Well, that's what we expect. How do you see it ahead of the budget offsetting the long-term impact of the U.S. tariffs on India? I know you already said the short and medium-term impact on the tariffs may not be that bad, but the long-term is the concern.
Well, today India has while the United States is India's largest goods trade partner, it kind of goes neck and neck with China. If you add up all the European Union nations, it's actually about equivalent to the trade that India has with both the United States and with China. And you've seen India's trade agreements have really kind of progressed. We followed the details, and some of the first agreements India signed in this kind of midway through Modi's second term, they were focused narrowly on tariffs. Agriculture kept out of that. And some of the other bells and whistles that we'd like to see in really robust trade agreements like investment protection provisions were largely left out. But as India's focused on building more and more deals, they've actually increased more robust provisions. And I think Europe, these negotiations with Europe began almost 20 years ago. And Europe wasn't willing to sign a deal that wasn't good. They wouldn't sign just kind of one of these pro forma deals that India signed with Japan and Korea. They wanted something that had real market access opportunities. Well, they saw the moment. India's been signing much stronger deals with a lot of its other partners they've signed recently. So Europe kind of saw the chance. And frankly, this appears to be a pretty significant year for India's for Europe's full court press of India. And trade is obviously a critical part of it. They did announce they want to get a new security framework, and that has me scratching my head a little bit more, because when India considers its big threat, China, of course, is first and foremost, and Pakistan to some extent, Europe hasn't wanted to play in those games. So I don't know what on the security front is going to happen, but at least on the trade front, I suspect if they get a deal done, it's going to be pretty robust.
You've written previously that India's economy has grown significantly, but its ability to use economic tools to advance its diplomatic goals remains modest. What should India do that it hasn't?
Well, I think to some extent, I don't know that I'm actually counseling India to do more, but when they talk about trying to be a leader of the global South, in as much as that thing even kind of exists, they don't want ideological leadership. They want weapons that they can't make. They want larger countries to settle disputes. They want foreign investment coming in. They want exports going out. India can offer its market, but right now, when you look at India's trade agreements, they've mostly been focusing on developed countries. So even in terms of trade and investment, they haven't really been using trade policy as a way to build ties to the global South. So I think right now, I wouldn't counsel the Indian government to dramatically increase its budget for foreign aid and foreign assistance. Shipping weapons, of course, getting some sales is always kind of a good deal. I just simply think that when for foreign policymakers that are thinking about India as a relatively small player on global issues, you're thinking of the India today, and we got to start thinking about the India of 2050, when India will be a massive economy, a $20 trillion economy, have a lot of resources to expend in building ties with countries. And if we're not working in closer collaboration when that time comes, it's going to be too late. So I'm not counseling India to spend a lot more today. They can get some deals, outbound investments, some trade. That's always a good thing. But just that policymakers in Washington and other capitals need to think about the India of 2050 and start planning on that, because India is going to be a huge economic behemoth.
Essentially, one final question, briefly. Is BRICS realistically able to form an alliance like NATO? Because we've seen that at the end of the day, it's been resilient even after the threat that Trump gave to it. When you have these internal disagreements within BRICS that you have written about, can India strengthen BRICS as its president this year while trying to negotiate those lower tariffs and a trade deal with the U.S.?
I don't think BRICS has a very strong future. It's a meeting ground. There's certainly some soft issues they can work on. They've created a development bank. But when you talk about some of the next steps in terms of commercial integration, like having a common currency, the very notion is ridiculous. China is far larger than the rest of the BRICS countries combined. So if they did form a common currency, it would basically be a China currency. I don't know about you, but it's hard for me to imagine Indian policymakers ceding currency control to China. Unless tensions drop down dramatically, unless Beijing changes course dramatically, unless Russia changes course, I think India will be happy to occasionally dance with BRICS countries, but look for alternatives, at least until you've got more stability from other BRICS countries. So I think for right now, it's still just a nice gathering ground, but not a lot of substance yet.
All right, Richard, thanks so much for joining us and calling BRICS effectively ridiculous. I appreciate that. That's an interesting perspective. Richard Rosso from Center for Strategic and International Studies. Our coverage from Davos, of course, continues. Coming up, more from US President Donald Trump's wide-ranging interview with CNBC. Stay with us. We'll be back in 2. Welcome back. This is Inside India. Treasuries are retreating after US President Trump backed off his tariff threat over Greenland. But investors still have their eye on who he will pick as the next Fed chair. The president is saying he has narrowed down his options to just one candidate. Trump spoke to CNBC's Joe Kernan at the World Economic Forum at Davos about this. Here's a slice of that.
I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1 in my mind. But
did
I will
Rick
say
Reader
this
impress you in recent?
Very impressive. Yeah, he's been there for
because for a while the betting markets had Warsh in the lead.
Well, Rick is very good. They're all good. You know, all 3 are good. All 3 would be, I think, good. We have a problem with the man that's there now. He's too late. He's always too late, except when it comes to politics for the other side. Yeah. Where he was actually too early.
Another one, a person I know you have a great deal of admiration for is your Treasury Secretary.
Yeah.
He made the point that...
By the way, he only wants to stay where he is. That's one thing.
Right.
He's fantastic, but Scott only wants to stay where he is.
His point, as a real estate guy, some people say you always want lower rates, but Scott made the point that if you have productivity gains, whether it's from AI or whether it's from Big Beautiful Bill, whatever it is, that you need a Fed chairman that can't get too agitated about a hot GDP number. In other words, we might be at a point where we could run nominal GDP of 8% or, well, after inflation of 5.5%, but that doesn't mean that it's inflationary and that you need to raise rates. So have you considered someone that could be like a Greenspan in the 90s?
Well, that's what I want. I mean, right now, if you announce great numbers, the stock market goes down because they say, oh, they're going to raise the rate, they're going to kill it, which really stops you from having any great runs, and we want to have a great run. So we're going to be at 5.5 or something. They're predicting. I don't know. It's much higher than they thought. But let's say we're at 5.5. We could be at 10, or we could be at 12. We could be at 15. But immediately when they announce good numbers. Now, in the old days, you're too young. In the old days,
you think I am, but you
know.
No,
but 20. I know you look good. Whatever you're doing, keep. But look, Joe. In the old days, when you had a good run, when you had you'd announce good numbers and the stock market would go up. Now the stock market crashes every time you have good numbers because they think everyone's going to raise rates. And growth is not a big cause of inflation. In fact, it can go the other way. So look, we've had tremendous growth and we have almost no inflation. For the last 3 months, we have 1.2% inflation, and yet we've had tremendous growth.
Do you, at this point, have plans for what you would do? And you said you won't fire Jay Powell. Let's say he decides, I'm not going to be pushed around. I don't like the way I was treated. Whatever he decides. And what if he decides to stay on the Fed? He doesn't need to leave when he's no longer chairman.
We'll see how it all works out. I mean,
that could create a block of 4 people that still
Look,
vote.
We'll have to, we just, in this world, we live with the cards you dealt. And if that happens, his life won't be very, very happy, I don't think, by doing it. I think he wants to get out. He has not done a good job. He's done a horrible job on buildings. He took a small little complex, the Federal Reserve complex. I could have redone it. I could have fixed it for $25 million. It would have looked beautiful. I think he's up to almost $4 billion.
Yeah.
The most expensive project ever built per square foot. And he's either incompetent or he's crooked, I guess, right? But so we'll find out.
Now, in that same interview, President Trump also reiterated his plan to impose a 10% cap on credit card interest rates, saying that credit card companies charge extremely high rates and that many consumers do not realize how much they're paying.
Credit card companies are getting 28%, 30%. These people don't know they're paying that.
Right.
And I said 1 year cap of 10%, and I love it. I know it's sort of like, it sounds like the mayor of New York maybe came up with that, but people are paying, they can't make it. They can't pay 28. Whatever happened to usury, they can't pay 28%. And so I said 1 year, I'd like to see a 1 year cap of 10% with the credit card companies, and they'd understand that. I've had calls from credit card companies, people that are friends of mine, actually, and I treat them good. I respect them greatly, but they make a lot of money. They got to give people a break. 28% interest. People go out and they buy something, and if they're a little bit late, they're paying 28%. They end up filing for bankruptcy. So I would like to see that happen, yeah.
Coming up, a candid assessment from Davos on India's growth story and the risks ahead. We'll bring you key takeaways from a World Economic Forum panel discussion on India's economic future. Stay tuned. Back to the World Economic Forum, NVIDIA CEO Jensen Huang was also in Davos and spoke on a panel where he said AI is driving the largest infrastructure build-out in human history and that companies need to continue spending.
The AI bubble comes about because the investments are large. And the investments are large because we have to build the infrastructure necessary for all of the layers of AI above it. And so I think the opportunity is really quite extraordinary. And everybody ought to get involved. Everybody ought to get engaged. We need more energy. I think that we all recognize that. We need more land power and shell. We need more trade skill workers.
Now, India's Minister of Electronics and IT, Ashwini Vaishnav, is also at the World Economic Forum in Davos. He was speaking at the panel, Can India become the third largest economy in the world? At the forum, Vaishnav highlighted India's progress in all layers of the AI stack.
India is making very significant progress in all the 5 layers of AI stack. We have already become one of the largest AI-based services provider to the world. Entire IT industry has pivoted from software services to AI-based solutions. The second layer, the model layer, our stack of sovereign models is progressing very well. We must understand today that 95% of the work can be done with a small 50 billion parameter model. You don't require a trillion parameter model to do the things that you need in your day-to-day life and in your enterprises. Our focus on semiconductor industry, the third layer, is very strong. We are investing $70 billion in the fourth layer, the infrastructure layer, and energy, which is the fifth layer. We have opened it up. They opened the entire energy sector, the nuclear energy sector, to private sector, so that we can have a sustainable, clean energy for the AI world.
CNBC TV 18's Shireen Bhan caught up with the former IMF Deputy Managing Director Geeta Gopinath in Davos. She spoke to Gopinath about how AI could affect jobs in India and the growth outlook for the country. Take a listen.
So India's growth is, one of the highest, is the highest among the major economies of the world. It is going to become the third largest economy. It's just a matter of, a couple of years. Based on current numbers, it will be 2028. If it's able to sustain this level of growth, it will be able to raise per capita incomes, which is the true challenge for India right now. And we are seeing good reforms happening in India. I think the public infrastructure, both the physical infrastructure, the digital infrastructure, both have been, truly transformative for India. But there are challenges with creation of jobs, with land acquisition, with judicial reforms. All of that needs to still happen.
The currency, and we've seen the rupee move to 91.50, and it's been a very swift and a severe fall in the last few weeks. What do you make of that and the implications of that, and whether or not we should see much more active sort of intervention by the RBI?
So to understand what's happening to the rupee, I think we have to keep in mind a couple of things. One is that because there was a loss of intervention by the RBI in 2024, the rupee did not depreciate as much as it would have. It kind of went sideways. So a bit of what we saw in 2025 was just undoing that pressure that was keeping the prevent the currency from depreciating in 2024. So it's a bit of catch-up, right? And then there's the other piece, which is the fact that, if you look at Indian equity markets, they've always been viewed as being stretched in terms of valuations. They were more stretched in 2024 than they were in 2025. But you saw a rotation of money out of India back into China, back into other markets, including Japan. And so that portfolio outflow, combined with this tension around trade and tariffs with the US, has added to the pressures on the rupee.
Well, jobs, Geeta, and I want to address that issue because that is an issue that governments around the world are grappling with, including, of course, India. And, as we talk about AI and scale deployment and so on and so forth, what's the outlook on jobs? The World Economic Forum in its report says that there will still be net addition, even though there will be displacement of jobs. How are you seeing this, and whether we are prepared to cope with the challenges?
This is a challenge for India, I would say a bit doubly, because given India's size of labor force, given how it's grown, which is since the 1980s, only about 30% of its growth has come from the labor force, right? So we talk about the demographic dividend, but India's growth has been very capital intensive. even now. And there's lots of reasons for that, including the lack of labor market flexibility, the skills that exist, and so on. So we're starting from that point, and on top of that, you add another automation technology to services, which is where India was strong and exporting, BPOs, call centers. That's where India was getting a lot of its export revenue from. That's going to disappear. Just pure coding, simple exercises, that's going to be affected too. So how quickly all of this plays out will determine whether there's enough time to create new jobs and new tasks for people to get back into. But I am worried.
And at a panel with the IT Minister, Gopinath highlighted another challenge that India is currently facing, which he says is even bigger than tariffs. Listen in.
When you're talking about business development, I want to talk about pollution. Mm-hmm. Pollution is a challenge in India. And if you look at the impact of pollution on the Indian economy, it is far more consequential than any impact of any tariffs that have been put on India so far. If you look at the annual cost to India's GDP of the level of pollution that you have. And it's not just the effect on economic activity, but it's also the loss in lives. I mean, the numbers are really large. Based on a World Bank study that was done, I think it was published in 22, about 1.7 million lives are lost every year in India because of pollution. That's 18% of the deaths in India. I think even from any international investor's perspective who's thinking of coming in and putting up a shop in India, if you have to live there and you have the environment is not of the kind that you feel that, okay, this is going to be consequential for your health, it holds you back. And obviously, not to say, but all the Indians that are living in this kind of pollution. So addressing that on a war footing is critical. I mean, this has to be a top mission for India.
Along with deregulation, we're putting it right up there.
Along with deregulation for India.
I'd love to hear how one can address that on a war footing when a country also has to develop rapidly. Turning to currencies, India's central bank has been stepping up support for the rupee. RBI data shows that in November it sold a net $9.7 billion in the foreign exchange market. The RBI bought over $14 billion and sold around $24 billion during the month. When the rupee hit a record low amid that trade uncertainty, which the US and persistent foreign outflows, it hit another record low in yesterday's session. We're also therefore watching the Indian market, what it's looking like, how it will open. We're still about 8 minutes away from that. GIFT Nifty futures indicating 25,328. Remember, Nifty had another low. Well, pre-market, it's already gone past GIFT Nifty futures as pre-market is open at 25,344. We're looking at the rupee, which is at 91.56. Continuing to weaken against the US dollar. Now, Vaibhav Sanghvi is the CEO of Ask Hedge Solutions. He joins us to talk more about everything that was said by Geeta Gopinath and others, and of course the rupee. I want to just start by asking you about the biggest story, the top story. We had an interview with Donald Trump. The US markets perhaps no longer spooked after Trump climbed down on the EU tariff threat. But India's market perhaps is a different story. Does it continue to get spooked?
Yeah, I think it's an interesting question. And the reason is basically because if you see for the last 1.5 years, one of the primary reasons for the underperformance has not been only the tariffs, but also the kind of valuation it used to trade, the earnings kind of downgrades which are kind of happening, which in my view actually has been starting to turn around from the last quarter, where the earnings have kind of stabilized and is now looking up. At the same time, valuations have corrected, and from a relative basis, vis-a-vis your other peers, we have now come within the long-term average bands as well. So as we think that if the earnings grow for the next couple of years by about, say, 14-15% each, my view is that whether there are tariffs or no tariffs, purely because from an overall perspective, from an exports perspective, in which ways US constitutes a very small percentage of our total exports. So my sense is I think those are the more important ones to kind of, getting it addressed, which are actually getting addressed, which brings to us some amount of constructive view for the next 2 years.
We're looking at the pre-open to get a sense of how the market is going to react in the next couple of minutes as it opens. I understand your point that the U.S. weight through tariffs, the impact of those tariffs on India is minimal, but it's never been about that. That is considered to be 0.6% of GDP. But the question is the perception, the sentiment. That impact is huge because of that. And you mentioned also that it's about the earnings, and those have corrected. Have they actually corrected as much as you're saying? Because you yourself, as I understand, are still worried that in this year we might still not see those double-digit earnings, and we might be towards, let's say, single-digit earnings, but towards the tens?
No, I think from an earnings standpoint, our relative confidence of getting to that mid-double-digit, kind of numbers is pretty high. And the reason is not only that one sector is doing well. I think when you look at the forecast, it is very, very broad-based. Now, unlike the previous earning growth stories, which were led by a couple of sectors, this time around, I think right from banking, financials to industrials to consumption, across the board, we are seeing good amount of recovery. Now, this is also because the government's focus in the last 10 years, we also was concentrated on the supply side. As against that, in the last year, in combination of central government, state government, and the RBI, all of them are focusing on revival of the consumption, which is the second big component of your GDP growth. Our understanding is basically that both of these components should continue to do well in the next 2 years, with the base getting much, much more favorable, is where we have relative confidence of broad-based earning revival, looking at a target of anywhere between 30 to 15% earnings growth for the next 2 years. So it's important. And lastly, from your point in terms of the sentiment, of course, I think US tariff, I'm not saying that it is not affected in terms of the sentiment. It is also got coupled with a few other narratives, including your AI trade, your Fed interest rates, and so on and so forth. So all of these narratives coming together has led to some size underperformance, at least in the last 1.5 years, vis-a-vis the other emerging markets, especially China, Taiwan, and Korea.
Since the focus is on Davos, I want to ask you a question about the rupture in the global economic order. Does that order now, the rupture, effectively mean that India needs to perhaps rejig its portfolio of FX reserves away from US treasuries?
Oh, again, a very interesting question. And to be very honest, I mean, the way we are looking at few things is, one, there has been a strategic shift, from the central governments or central banks towards having gold and silver in terms of your arsenal as well, from a reserves perspective, which is why one of those reasons why incremental buying from countries like China and India has resulted into pretty high prices into the precious metals. Lastly, I think from a currency perspective, I think it is always being a diversified basket, will continue to happen. But my sense is basically that as soon as we near or approach towards a potential trade deal with the US, I think those are the issues which will be there on the negotiating table, which eventual outcome will only come to post that. So let's wait for some time to have a final conclusive kind of inference from there.
And what if we have to wait till the end of Trump 2.0?
Quite possible. Purely, we never know that, in what form, and fashion the deal kind of happens. It's from what we see from the local standpoint is that it's not that India is in a much of a hurry to kind of enter into trade deal, purely because one of the contentious issue here is the agriculture produce. And in our view, I think it's going to be a very big political mistake if the current dispensation kind of has that on the negotiating table for them. So I think the government will hold on to any pressure tactics on pressure on opening up the agriculture sector from that perspective. So my sense is basically it'll happen in piecemeal basis over a period of time when both of the sides are kind of quite happy to progress in a path forward. So it's important for the top two leaders to kind of speak and get it going.
Analysts, experts perhaps are not as worried about the depreciating rupee, but the market perhaps responds differently. So in that context, the market's perspective, are you worried about the rupee? Is there anything also to reduce the pressure on the rupee that you foresee?
See, I think, one thing we should notice is basically till the time we have a current account deficit and you are persistently buying oil as a commodity from a global perspective, rupee, on a gradual basis will keep on depreciating till the time you have a fantastic manufacturing sector, robust manufacturing sector, which is kind of exporting. Now, having said that, it's a very typical trend. And if you date back to history, the rupee has depreciated on an average of close to about 3% on an annual basis in that sense. Now, the trend also is that in 1 year, you will see a sizable depreciation. And for the next 2 to 3 years, you see much stabler rupee. What we have seen in last year, or probably we are seeing currently or witnessing here, I think is that accelerated depreciation, which we didn't see, as Geeta also mentioned on the tidbit which you kind of ran. And my view is basically that for the next 2 to 3 years, I think from a foreign investor perspective, I think I would really lap up to the opportunity when rupee is depreciated, and then I can bring bring my dollar into the investments, at a depreciated level in the wake that the next 2 to 3 years, the rupee is going to be quite stable. So I'm not seeing anything different from what it's already happened, over the longer period of time in history as well. So this trend probably continues.
Okay, so when do the foreign investors jump back in? When the rupees are 94, 95, I don't know. Just give me your perspective on that in the context of another thing. I believe that you mentioned this in the past. 5% or so depreciation of the Indian rupee, depending on the timeline that you look at. I know you said 3% against the USD, but it has depreciated 12%, nearly 12% against the Chinese renminbi. Can you tell us how the market should consider that aspect?
No, of course. I think at this point in time, I'm going from a USD perspective and not comparing with China in that sense, purely because China, the whole structure of an economy from a trade perspective is extremely different. Secondly, while depreciation is something you should probably consider, and probably 91, 92 are the levels that you have already seen some sizable depreciation. In addition to that, I think my more focus would be the revival of earnings, which is coming on back of the GDP growth, which we have seen in the last 2 to 3 quarters. If earnings kind of revive, go to 14, 15%, going to grow up in the next 2 years with almost 14 to 15 year low ownership of FPI, there is a possibility where, if things go well, then there can be crowding in of FPIs into India during some part of the year. Now, when does it happen? I'm not sure. Whether it takes 2 months, 3 months, or 5 months, we are not sure. But in all our calculated forecasts, my sense is that earnings are, reviving, and that is something which markets generally love.
Okay, 2 quick questions. One, you'll just need to give a number. Near-term outlook for Nifty, but also Geeta Gopinath said that pollution is a greater threat to India's economy than tariffs. Do you think the market agrees?
Unfortunately, the market doesn't agree from the second one, purely because pollution is going to be the case till the time you are looking for an accelerated growth path. That doesn't mean that steps are not being taken to kind of curb the pollution. I think marrying both of them in a very balanced way is going to be the trick of the trade, and which is where the government is putting huge amount of effort to do that. They don't want to forego the growth, but at the same time are equally concerned, including the government, including the judiciary, and the overall citizens as well. So I think that is an issue which is getting tackled, at the highest level, from a government standpoint. So that's on the pollution. But with respect to the Nifty, my safe assumption would be if the earnings grow by anywhere between 13 to 15% for the next 2 years, we have corrected in terms of the valuation on an absolute terms and on relative terms vis-a-vis your other emerging markets. I wouldn't be surprised that we should be following at least the earnings growth trajectory in terms of the movement in the Nifty, which means if the earnings are going 14%, in 2 years, then probably 30 to 40% is something which we may probably, look at in the next 2 to 3 years in terms of our Nifty performance.
All right. Thanks so much for that. I know that you've also already said that there could be an ugly drop for base metals. And when we get you back, we'll talk about that. Weber Sangvi from Ask Hedge Solutions. All right, we're taking a short break. Indian markets have joined the trading day. We'll be back after this to talk about the big movers. It appears that the Indian markets are looking at whatever Trump has done positively at this point in time. It is up after a session that was poor on Monday, on Tuesday, on Wednesday, and right now it's up about 0.7%. And this is reflective of everything that's happened, not just at Wall Street, but also in APAC. Take a look at APAC. It is getting interesting out there. Everything is green. Mostly China slightly down. Just a short while back, it was green. Nifty 50 looking positive, even if there are concerns around the rupee. We'll come to that a little later. We're watching Eternal, one of the big stocks moving in India, one of India's biggest companies in e-commerce and quick commerce. Eternal, something big happened. Its share price marked a nearly 5% gain on Wednesday. Right now it's up 3.70, but this happened before two events. The first, Q3 results. We will come to that in a bit. But the second, the big one, the poster boy of the sector, the CEO and founder of Eternal, Dipinder Goyal, resigned from his position, handing over the role to CEO Albinder Dhinsa. While they have been college friends, Goyal did point to some nuanced criticism of Dhinsa just a couple of weeks ago over the needs of the leadership role. The move comes just a couple of weeks after Goyal ignited an online storm after trying to defend his company in the face of protests by gig workers or delivery agents over rider safety and working conditions under a tough 10-minute delivery model. Reports suggested the government stepped in to ask such companies to remove the 10-minute delivery branding too. But Goyal's post said that he was resigning not because of the strikes or the backlash, but because he wanted to focus on a new set of ideas, something he can't do if he was to hold the current role. It's worth noting that Goyal will remain on the board as vice chairman of the company and run a longevity-focused research arm and an aviation company for short-duration flights. He had also come under social media scrutiny for promoting a wearable monitor called Temple. The market now reacting to this news and Eternal's Q3 results, and that's perhaps the good news, a threefold on-year jump in its operating revenue for the quarter. Net profit surged 73% to about 1.02 billion rupees, and its quick commerce arm Blinkit, the largest in India, broke even, reporting an adjusted EBITDA profit of 40 million rupees after reporting a loss of 1.56 billion rupees in Q2. So some positivity there. Now also take a look at shares of Reliance. The conglomerate is set to resume buying sanctions compliant Russian oil in Feb and March after a one-month pause, sources told Reuters. Reliance last received the Russian crude in December after a temporary U.S. concession to wind down dealings with sanctioned producer Rosneft. And the new cargoes will be sourced from non-sanctioned sellers. Even so, these are reports that we're getting. We don't have independent confirmation. Indian drug maker Dr. Reddy's reporting a smaller than expected fall in quarterly profit, supported by steady domestic demand. The earnings update comes as Dr. Reddy's received an approval to manufacture and sell a generic version of the diabetes drug Ozempic, you know it. The company plans to sell 12 million injectable pens in its first year, targeting India first, then Canada and other emerging markets, as patents expire in March 2026. That's the concern. Our shares at this point in time, well, they're up quite a lot. And we'll hear more tomorrow when Dr. Reddy's CEO himself joins us for a CNBC exclusive interview on Inside India to break down those earnings, the company's growth strategy. We're also thinking about Tech Mahindra. Take a look at those shares because the company has signed a $500 million 5-year contract with Spain's Telefónica O2. The deal will see Tech Mahindra modernize Telefónica O2's IT infrastructure with revenue expected to ramp up in the second half of fiscal 2027. It's also the company's biggest ever win in Europe and a boost for CEO Mohit Joshi's turnaround plan. Dan Murphy will be speaking to Mohit today at the World Economic Forum in Davos. That's coming up in the special hour of Access Middle East. And that's all the time we have today on Inside India. Keep watching CNBC. We did say it. Access Middle East is, of course, up next.